Hey guys, John and Edgar here with Virtuous Roofing and Exteriors. Today we wanted to discuss and go over with everybody some things that people are finding in their policies that weren't there before, some things that in the past you had covered, and then things that are coming out now where you're not getting as much from the insurance company as you would have expected based off the policy you have with your insurance. So today we're just going to discuss and go over those things so that way you guys know exactly what you're in for when you file a claim with the insurance company this year, and if there's anything new or any changes to your policy, you know how to combat that. First thing that I wanted to go over is something that is brand new, so much so that I don't even really know, I don't know the definition off the top of my head, is an RPS policy. It's very similar to an ACV. In fact, it's kind of identical. So what RPS stands for in the insurance world is roof payment schedule or roof settlement schedule. It is a policy clause or endorsement that pays out depreciation, predetermined percentages for roof repairs or replacement based on the roof's age and time of damage. For an example, the RPS policy might cover 100% of the roof that is under 5 years old, but only 30% for one that is 15 years old. So, and this is where it's very, very similar to an ACV policy in that when you're scheduled to get payments from the insurance company releases the ACV payment to you first. And what that is that's the depreciated value of the item that they're paying for. So like an example for the roof, if the roof is 15 years old, they usually depreciate it. That's roughly half of the roof's life. And so they'll take half of that value and they'll give it to you first. Then if you have an RCV policy, once you complete the work, they reimburse the remainder. But if you have an ACV policy, you don't get that back. Am I explaining that correctly?
Yeah, I think he hit it nail on the head. Every project is different based on the age of your roof. And typically the RPS, from what I've seen, it kicks in after 10 years, 10-year-old roof. So if your roof is past 10 years and your insurance had you renew your policy, and then you get thrown into, because a lot of people don't review their paperwork is what I'm running into, would be when they renew their policy. And what happens is that when they sign on the dotted line, they run into an RPS situation where their roof is 15 years old, like you're saying, but that doesn't kick in until after 10 years of the age of the roof. So if your roof is 8 years old, I would recommend, if you were in a storm area, have somebody take a look, because then you would want to bring the home back to pre-storm condition before you hit the year 10. And then that's where the RPS, from what I've seen and understood, is
right.
10 years is when the RPS kicks in.
Yeah. Also, if you're just buying a home and you're buying a home with an aged out roof, a lot of times the insurance company, because it says that it's an endorsement, so you're endorsing them. I'll take all of this with a grain of salt. We're not insurance agents.
We're not.
And so as far as expertise, we don't have the ability to sign off on this. This is just our understanding and working with people. But as far as if you're buying a home with a lot of times you'll be endorsed into that RPS policy because the roof is older and the insurance company does not want to take on the full liability of that property. It's also a way to keep your premiums lower. Well, I mean, I don't know on that specifically. But yeah, so watch out if you guys are filing a claim and you know you have an older roof that's around 15 years of age. Look at when the last time you re-signed up or renewed your policy. Sometimes they can squeeze that in there to where you don't have full coverage, in which case, if you have a $20,000 roof, you are responsible for half of that. And that's a big portion to deal with. So
on that topic, talk with your agents about the RPS and ACV policy. And if you have any of the two, they will inform you on what you can do to change your policy. But I guess we can jump into the next one, unless you have anything else on this one. And then the other one is cosmetic exclusions. I've ran into that one more so often, I think, lately. We've been doing work all over Colorado, and I think there's some homeowners in specific areas that we've been doing work where they think that this is only happening to them. And so I just want to, again, we're not insurance agents or anything like that, but we are running into things that are very consistent. Cosmetic exclusions means basically, for example, your garage door. Your garage door will be impacted by hail. You see dents all over them, or your gutter system. They'll have dents on them. And if you think about it this way, it's like if your vehicle gets impacted by hail, but it still functions, then there's really no functionality
to the damage.
So with the gutters and the garage doors, if it's a cosmetic damage and not a functional damage, that just means they're not going to cover those two things or any metals, that aren't functional. And like a roofing system, when it's punctured by hail, it is a functioning mechanism, membrane where once it's impacted, water is going to penetrate eventually. So that's my understanding. I don't know if you have a different perspective on it.
Yeah, I mean, you nailed it on the head. I mean, cosmetic is simply just to the eye. So like it's still in good working condition, but to the eye, it looks messed up. To the garage door, to your vehicle, to your gutter system. The system itself is still working correctly. A lot of people used to have that included in their policies because at the end of the day, hail is impacting it and it is a part of the storm damage. Even though it's still working correctly, it would still be covered. But a lot of insurance companies, as Colorado's population grows and they're insuring more people here and more people are getting hit with hail, they're deducting these things from their policy so that way when you file a claim, these things aren't included.
We've seen where painting gets chipped, it doesn't get paid for because of the cosmetic exclusion. They don't believe that it was a functioning item, so they won't include it. But the next one you can touch base on.
Yeah, I mean, this brings us right into metals. Metals, it's a little bit more in depth where it's not just cosmetic. Anything that is metal. I mean, that could be the cover on your AC unit, your garage door, your gutters and downspouts, even the metal. All of the metals on the roof won't get covered if you have this excluded from your policy. And again, that takes that total claim value from what its potential could be and brings it down a lot. And it impacts you way more than you think because you have a lot more metal on your property than you know. And especially when it comes to the components on the roofing system. And again, when roofers replace a roof, in order to have a full warranty on it, you have to replace the entire system.
The last one is percentage-based deductibles. My goodness, these are all.
Yeah.
There's been homeowners that we've worked with that literally have every single one of these in their policy. The roof was one of my homeowners. The roof was 20 years old. Metal exclusions, cosmetic exclusions, and a 2% deductible. Meaning they got this amount from the insurance. They got $0. And even though we tried to supplement, try to help as much as we could, zero money from insurance. They quoted the project to be done at, I believe it was $24,000. That means that the insurance basically agreed that there's damage. They wrote up a scope of work. And then after excluding everything on this that you're seeing on this board, they are getting $0 and they're having to come out of pocket for all the repairs. So we're having to navigate that with the homeowners, but the percentage deductible, they're basing it 1% of the property or the home value, not the lot. I think it's just the property itself, and or 2%. And if you have a lot of these items that are missing from your policy, you're looking at probably $8,000 plus thousands of dollars additional coming out of pocket because you don't have any of these endorsements in your policy.
Just because it's the cheapest thing doesn't mean it's the best thing. A lot of times those things have consequences. So when you have a percentage-based deductible, definitely, filing a claim can be rough because if it's, I mean, as home values go up, you're only paying more. So 1% and 2% of, if you have a $600,000 home, I'm not a mathematician, but that's a lot of money that you're coming out. And if you have a $20,000 roof and you're paying $6,000 to $8,000, you're in a rough spot. So
new homeowners, our real estate partners, friends, family, everybody that owns a home that got through to watch the video, I highly recommend that you guys go to your agent, go to your insurance carrier. And we live in Colorado. We get a lot of hail, we get a lot of wind, we have a lot of ice dams, we have a lot of different elements that affect us, that over time you will need a roof replaced and or a project done to your home.
Yeah, these are rough things because at the end of the day, if you're not gonna, why have insurance on your home if you're not going to be protected when we have catastrophic events? And Colorado is one of the higher states where you're going to have larger hailstorms. I think once every 5 years we get things above 2.5, 3 inches, things like that. So make sure that you are covered properly, and then also you have a solid contractor or somebody that's willing to go to bat for you in these situations, somebody that knows how to navigate the insurance process, that can anticipate these things and solve these problems with you rather than just filing a claim, not knowing what to do, and you're stuck paying a ton of money. And we would love to be that contractor for you, so reach out if you guys have any questions or concerns.
Thank you guys. We'll see you guys on the next one.
Yep.